Good morning, ladies and gentlemen. This is a special Defion Productions podcast, live stream on a Saturday morning, a little bit off from our regularly scheduled Thursday podcasting. This is episode 97. Today's theme, breakfast in Bitcoin. We're going to talk about the last couple of days, news in Bitcoin and the greater crypto sphere, as some things have been happening adjacent to Bitcoin that we need to talk about that have an effect on Bitcoin, I believe, and some of the other aspects of this system. We're going to talk about Trump's executive order that he officially signed a couple of days ago. We're going to talk about Harvard. We're going to talk about Michael Saylor talking about Bitcoin treasury companies as well as Ethereum treasury companies. We got a lot to get into the next hour. So whether you're drinking an energy drink like me, drinking your morning coffee, just hanging out, enjoying a nice summer day, kick back for the next hour. If you're watching live, feel free to jump in and jump on our chat. If you're watching on Facebook, Twitter, or YouTube, please comment in, and I'll try to do my best to interact with you. At the bottom of the screen, all of my socials are going. So if you're watching on one and don't know the other two platforms that we're live streaming on, they're all going under the screen now. So please follow, please like, subscribe, share, all that fun, good stuff. Let's jump into the charts to see what kind of action we got going on this AM. It looks like we got Bitcoin sitting a shade under 117,000 at 116,953. Total market cap of Bitcoin, $2,327,000,000,000. The news of the last couple of days has been Ethereum coming back from the dead. Ethereum is sitting a shade. Well, it's actually gone down a little bit since I got into the studio. It's at 4,177. When I looked a little earlier, it was just under 4,200. The market cap has crested 500 billion, sitting at 504 billion, 524 million. XRP's even been moving. We got a $3.28 XRP. Going down the line, Solana at 180. Dogecoin 24 cents. The total crypto market cap altogether is at 3.85 trillion according to Coin Market Cap. Fear and Greed Index at 62. Bitcoin dominance is still at 60.8%, with Ethereum dominance at 11.8%. Just looking at these charts here, I can tell you that last week when we were filming, the market cap of crypto was kind of similar, close to that 3.85 trillion. I think it was like 3.82 or 3.83. And Ethereum last week was 30, maybe 35, 3,600. So for those that think that we're having an altcoin season right now, I've seen some people tweet that it's more like just Ethereum moving. It's not really altcoin season. Because if you look down the line with Ethereum in the last 24 hours being up 6.52%, you don't really have anything else. Well, Dogecoin a little bit, but everything else is kind of not, the gains aren't really anywhere near what I mean, Ethereum's up almost 20% in 7 days. Even XRP's only up about 12. No, Dogecoin's actually moving 27% in the last 24 and 20% in the last 7 days. It's kind of weird. But, the total market cap isn't really moving. You would think at this point with Bitcoin at 117 and Ethereum at 4,000 that we would have a market cap over 4 trillion, but we don't because all the shit coins are underperforming. Some would say underperforming. I would say performing just as they should be performing. Really quick, I'm going to update my Twitter so we can get some people checking out the podcast on Twitter. While I'm doing that, Rich, what did you mentioned when we came into the studio what I thought about Ethereum? So you've seen a little bit of what's going on. What were your thoughts?
Well, it's funny. I mean, the little bit of that I've looked into, the only other one that seems to me like has the staying power is Ethereum. So I do feel like there's a lot of people that are like big supporters of that. I think there's a lot of people that have faith in that one, so I'm not surprised when it has these like positive moments. You know?
And I would not be one of those people that has faith in it or think it's good. But yeah, I see what you're saying, and
I feel like
I understand.
And, you know, from an outsider, and even though I am still an outsider, even though I have my little bit of Bitcoin now, but I definitely feel like if you just hear people talking about crypto, they'll say Bitcoin, Ethereum. And then and then the other ones
the
are
number
always like the
bias, too.
occasional one, the Trump one or the Doge one or
And if
something like that. But that's the one that people seem to know, even if they don't know anything about crypto. There's name recognition for that one.
it's that, and it's also just the number bias, because you look at Bitcoin at 117,000, and getting one coin of Bitcoin at 117,000 seems so hard and so unattainable. But when you look at a coin like Ethereum at 4,000, it's like, oh, well, I can spend $400 and get, 0.1, or maybe I can take some of my savings and get. Right. It's a lot easier, people think, to get to that, or it is number wise, numerically, to get one whole Ethereum than one whole Bitcoin, not realizing that the difference between Ethereum and Bitcoin goes far beyond just the price and the numbers and all that. Let's move on to this. I found this on X last night. I want to play it real quick, just to kind of like set the tone for today's Bitcoin and Breakfast in Bitcoin podcast. This is a explanation in under 3 minutes of Bitcoin, a funny little animation that I found amusing that I want to play to kind of start things off today.
Money is easy to make. Society begins to break.
So how do we make money that's easy to carry but hard to create?
Well, one solution is Bitcoin. Back in 2008, I became fed up with government money, with the corruption, the manipulation, so I created a digital currency. Digital money that can be sent directly from one person to another without any bank or government involved. And the best part? It's hard money.
It's the hardest money ever invented!
Bitcoin is very hard to make more of. Each new coin gets added to the supply only after a computer works very hard to solve a math problem, where there's no shortcut and solving it costs a lot of energy and time.
Okay, but if it's on a computer, can't I just copy and paste?
Not with Bitcoin. You see, there's a public record of every Bitcoin ever created. It's called the blockchain. It's like a puzzle, and each Bitcoin has its own unique shape. And because everyone has a copy of the public record, if someone tries to fake a Bitcoin, it won't fit the puzzle and will be rejected by the network before anyone can use it. That's why Bitcoin is so safe from criminals and the government.
You said criminals twice.
And unlike dollars, which can be printed endlessly, there will only ever be 21 million Bitcoin. It's almost impossible to inflate. The only way to get it is to earn it or buy it from someone who has.
Aha!
No offense, but if you control Bitcoin, couldn't you manipulate it just like the government?
I don't control it. No one person does. It's controlled by a public network of Bitcoin users that anyone can join. So if someone wanted to change something in Bitcoin's code, they would need to get the majority of the millions of Bitcoin users to agree to it, or the change doesn't happen. And when has the majority of us agreed on anything?
One-ply toilet paper is garbage.
Touché.
Wow, I didn't know made-up money could make so much sense.
Today, millions of people send Bitcoin instantly and cheaply to each other around the world without any bank or government involved. And because Bitcoin is hard money you can't just print more of, the more people who use it, the more valuable it becomes.
Emily, if we take Lyle's Bitcoin, we could be rich.
I could pay for college entirely. You could outsource your movie and pay to have your name in the credits.
Slow down. I'm not saying that Bitcoin will make you rich quick or even at all. Right now, only about 1% of the world owns Bitcoin. And because it's still being adopted, some days it goes up and even down.
Also, investments, though potentially lucrative, can be risky.
Only invest what you're willing to lose. We know. Wow, I think I get it. Good money should be easy to use, but hard to create.
And because Bitcoin is digital, it's fast and cheap to use. And the blockchain makes it hard to inflate.
Thanks, Mr. Satoshi.
What?
Mr. Satoshi?
He's gone? Or was he ever even
I thought that was good.
Hilarious.
Yeah.
That's great.
Because there was
is so many jokes in that. There's so
isn't
many
it
great things.
very well done? Yeah,
That's incredibly well done.
There was a video of explaining Bitcoin in under 3 minutes that I used to use that came out in like 2015, 2016. And it was very like opaque and vanilla and bland. And I saw this last night and I'm like, this is so much better because it's somebody
Make
like,
sure you put the link to that video.
yeah,
in
yeah.
your comments.
Yep. They put some time and energy in that, and then just so many like innuendos to like what Bitcoin is, and I thought it was really, really good.
I love the concept Satoshi just kind of like his face was always hidden. We didn't.
Yeah,
know what he
yeah.
looked like.
And then at the end, he
like-
just disappears.
And he's just gone.
Where'd he
Like,
go? And then they
which is
say,
great.
was
Where'd
he?
go?
Then
Like,
they say, was he ever here?
it's great because it really does. What I like, I mean, obviously, I know all that now, and I just think that was great because that just ties into the lore of it more so much. Like, thank you, Mr. Satoshi, and it obviously reminds you of all those like that animation style, and obviously I know a lot about this stuff, so I love the fact that it had that like Disney like channel animation style and the voiceover and the little funny cartoon characters, and so I mean
Yeah.
it really was like really kind of a nice breakdown of what Bitcoin is and how it works, like those old videos used to show in school. That's great. That's very cool you found that.
Yeah, I like that, and I'm gonna use that when I'm talking to people for the first time with Bitcoin. I think just to kind of like break it down in layman's terms. Moving on to the next thing, President Trump signed an executive order this week, and inside that executive order, it is allowing now crypto and alternative investments to be put into 401k plans. Donald Trump is set to sign an executive order that would allow crypto and other alternative assets to be included in 401k retirement plans. The highlights. U.S. President Donald Trump is set to sign an executive order permitting alternative assets, including cryptocurrencies, in 401k retirement plans. The move could open up $12.5 trillion in retirement savings to investment options traditionally limited to accredited investors. The policy could reshape retirement planning by giving Americans access to more diverse and higher growth investment options. That's pretty big for a multitude of reasons, some of which I think are good, some of which I don't really care for. Obviously, the crypto aspect and putting, shit coins in the 401ks, I'm not a huge fan of. Allowing 401ks to have Bitcoin in it is obviously something that I support and would want for my own 401k. But that accredited investor language, for those that don't know, that aren't like piped into traditional finance or like really understand how the investing world works, and sometimes I take that for granted, and I think the people that watch this podcast are somewhat financially literate and financially savvy, but that isn't always the case. When you're investing, there's certain investments that are only available to what they deem to be an accredited investor, and you have to meet certain criteria to be an accredited investor. One of which for guys like us would be that we have to have at least $1 million of net worth and a salary of over $200,000, I believe, a year. And your net worth can't include your home. So you can't have a house that's part of that net worth. You have to have net worth that's in other assets, not including real estate or your property that you live in, and have a salary of over $200,000 a year. That would make you an accredited investor. For most of us, that's not us. We don't fall in that category. So those types of investments would not be open to us. Your regular working class, everyday citizen that's trying to like make it to the next level has no access to any of that stuff. So that's what an accredited investor is. And up until this executive order, all the accredited investors were the ones that had access to all those types of vehicles that would have that would have crypto a part of the certain portfolios that they could be managed in the fund managers and their financial advisors and such could do with them and for them. But now this is going to open up an opportunity for maybe your mom and pop 401k to have some exposure as one of their options, to have some sort of, maybe the Bitcoin ETF or, God forbid, one of these other shitcoin ETFs into your 401k to give you exposure that up until this executive order you didn't have access to. And this number here is crazy. That's a big $12.5 trillion. The move could open up $12.5 trillion in retirement savings to invest in investment options that were traditionally limited to accredited investors. So a $12.5 trillion influx into this ecosystem that's only worth, when I showed you at the beginning of the podcast, 3.8 trillion right now. That's about four times what the current entire crypto market cap is, that they're saying could be flowing into this asset class. That's huge, because you have to think of it this way. To move the price of Bitcoin, you don't need dollar for dollar coming in to move the market. Like, to move the market cap $100 billion, you don't need $100 billion to come in. There's velocity that's required that moves markets. And it's only a percentage of what that number that the market actually moves that comes in to move it that number. So if 4X is coming in, does that mean that this ecosystem 20X's? You know what I mean? Is this going to be a $60 trillion market cap ecosystem in 10 years? I mean, I without this executive order, I could see it being between 25 and 35 in the next 10 years for sure. But this could really like double that number and really ramp things up. So this is big for the entire ecosystem, and this goes to the greater conversation that I'm going to have, I think, today. And unfortunately, Rich, it'll be with you because you're the one that's here and you can kind of give feedback. And we've talked about it, and you've heard me talk about it a bit the last couple of months. This is a very critical part of the traditional cycles per se. If indeed we still are in cycles, this is a very big inflection point that we're at, like right now, which is very, very, what's the word I'm looking for? I don't want to say alarming or concerning, because those wouldn't be appropriate words, but it makes you kind of look with a little bit more wondering eyes when you see ETH move like it's moving right now. Because if we're still in a 4-year traditional cycle, which I for a while have been leaning towards we're not, and the cycle is going to break. I've believed that for a while. I've been up until recently about 75-25 that the 4-year cycles are going to be broken. But with Ethereum moving like it has the last couple of days, and we're going to talk about a little bit about why that's happening. So there'll be some theories as to maybe it is still not going to be a traditional cycle top like we've seen. But, we're almost in the middle of August. What's today, the 9th? August 9th? Yeah. So like we're a couple of days away from technically being in the middle of August. The 4-year cycle tops traditionally happen in the fall following the halving. So in the 2012 halving, we saw a cycle top in like November, December of 2013. In 2017, after the 2016 halving, we seen a cycle top around October, November-ish. And after the 2020 halving, the 2021 cycle top happened around that fall, September, October-ish. That's when we had those 3 previous parabolic tops, were in those 3 time frames. Here we are. 2024 was the last halving. We're in 2025. So if the 4-year cycle is still a thing and we're still setting up for that parabolic top, the blow-off parabolic top, we're right in that zone where it would be happening in the next 2 to 2.5 months. I would say probably from most charting that I see is, the September, October range. So like we're in go time. If this is a parabolic cycle top like we've typically seen, and let me tell you, boys and girls, and again, I'm saying 75-25 that the 4-year cycles are over. And I believe that because of the institutions that are here now, and that retail hasn't really been in up to this point like they have in previous cycles. But let's pretend that we are still on a 4-year cycle top cycle. If that's what we're going to get, like the next month to 2 months will be insane. Absolutely insane. I can't even imagine at 6-figure Bitcoin the type of parabolic move we would see, not just in Bitcoin, but just in the entire market. Because if we're going to have that parabolic run, that means that $117,000 Bitcoin could go from 117, or maybe we stair step up to like 125 before it makes its move. We could see Bitcoin go from 125 to 200 in like 12 days. And if Bitcoin goes from 125 to 200 in 12 days and does a basic, 55, 60% move, and then altcoins do have that, ridiculous nonsense that they usually do, like some of those moves are just going to be ridiculous, and you'll just see that market cap explode. And as much as that's exciting, and as much as it is, your brain would tell you that that's what you want to see and that's great and people should be celebrating, getting excited, that's actually the most dangerous part of the crypto experience. And I say this from experience because I experienced it in 2017. The parabolic top, and I say this from my experience, and I've talked to others that experience for the first time, and it's almost universal for most people. It's paralyzing. It's absolutely paralyzing. And when I say paralyzing, you don't know what to do. It's extreme euphoria followed by extreme fear, because you're watching your portfolio go parabolic. You're watching the numbers just go up and up, like by the day, by the second, by the hour. You're watching your net worth increase exponentially, which is great. It's a good feeling. And then at the same time, you're saying to yourself, am I supposed to sell? Should I sell some? Should I sell all? Do I sell anything? If I sell here, am I missing that? I remember thinking in 2017, on that run up to 20,000, that it was going to $1 million a coin. I remember actually thinking that in late 2017 when I watched it go from under 1,000 and like literally a couple of like one, or I don't know the numbers exactly, but within a very small time frame, going from 1,000 up to that 20,000 and going, if it just 20x to here, and I'm doing the math and I'm like, geez, another 10x is 200K. It just 20x'd. It could definitely. So if I sell it here at 20, yeah, I'm making a ton of profit, but how much am I losing by selling? So then you start to think about what you're losing instead of what you're gaining. And that's something that you don't typically experience in traditional markets, except for very small segments of the traditional market. You might see an Nvidia, or you might see a Palantir, or you might see some of these like individual stocks make those parabolic runs, Tesla, some of those that have done it in the past, like one specific coin. You don't see like the entire stock market go up like a 10x in like a month. Like that's never happened. You've never seen equities 10x ever, where you're just like, oh my God, I'm insanely rich. When do I sell? And you're just like, I don't know what to do. You just get hit with paralysis. And there's a big part of me, a much bigger part than the other, that doesn't want that to happen for a variety of reasons. Not just because I feel like I'll be paralyzed, because I experienced that in 2017 and I did it in 2021 because I didn't sell anything in 2021 and I just held on. I'd already got to my understanding and I got my deep understanding of what I held, and it was fun to watch, but it was a long-term hold at that point. I wasn't as worried. And I would be the same here, watching it go parabolic. I'm still not going to sell anything, so I'm just a viewer I'm just viewing it at that point. But I will tell you, if this is your first cycle and you've never experienced that before, you're in for a very, very weird experience if we get a parabolic move. And God help you if you're holding a shitcoin and a shitcoin does a parabolic move. Because I can tell you with 100% certainty, absolute 100% certainty, that if we get the parabolic top that we typically get, that, Bitcoin will eventually, we're going to go into a bear market, because that's just what happens. Things don't go up like nominally forever. That we'll get a drop, and Bitcoin will stair step down, and altcoins will fall off a cliff. So you'll watch, if you're holding a shitcoin, you'll watch your shitcoin 10x, and then you'll just watch it basically fall off a cliff and go down 90% or 95% or whatever. And then the absolute worst part is when you're holding on the way down and part of you says, I need to get back to this point and then I'll sell, and it never gets back to that point. And then you just, we do what we call round trip your bags. Troy talked about this before when he was on the podcast. I just pointed to an empty seat over here. Troy talked about this before, doing this in the last cycle. He round tripped his bags. He had a token that he held that did like a 30x, and he literally held it all the way up to his 30x and all the way back down past what he had bought in for. And that's what we call round tripping your bags. Rich, was there was a comment? Oh, one of my best friends. Come on, people, send stars, help this man find a shirt with sleeves. Yeah. All right, so I went on a little rant there. We're 25 minutes in. I want to get to some of this other stuff. I do want to play this video. I want to play this video from U.S. Treasury Secretary Scott Bessent. This is a Trump appointee, and this is him talking about how Trump views and Trump's plans with cryptocurrencies and digital assets.
Digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially.
So really quick, that was just a 27-second clip of Scott Bessent talking about the Trump administration's view on digital assets. And obviously at this point, they're very pro crypto, pro Bitcoin, obviously with all these executive orders that the Trump administration has signed and making it much more easier than the Biden administration was making it for these companies, organizations, and coins to thrive.
Can I do have a question about this situation with the executive orders. I'm not a big fan of executive orders by any president. So, given that the fact that he has these departments, like the Department of Labor runs 401s, right?
Department of Labor
and Social Security, like who runs? Because it's not the FCC. Who sets policy on what 401ks can do?
Congress.
It has to be voted on.
It has to be Congress.
It's not.
That's congressional.
Aren't they oversought? Like
congressional.
So he would have.
The thing about executive orders, any executive order, when you do it, that's why they're kind of
The
like.
problem is they can be undone.
Yes, and that's the point that you're getting to.
I guess roundabout. That was my concern.
You are.
That someone's going to file a lawsuit, so it doesn't really hit the way it should unless it's law.
Many Bitcoiners, myself included, were not impressed when Trump made an executive order talking about Bitcoin strategic reserve and the United States buying Bitcoin and all that stuff. It's like, it's cool. It's much better than what we had before. And it's you can get excited about it. But the problem is if it's not voted on by Congress, the next Democratic president or any president that comes in that's not pro Bitcoin can just say, yeah, we're not.
Or it can be taken to court because it wasn't passed. It's not a law. So like some guy, some lady, Elizabeth Warren, whoever can sue and say, no, we're not doing that. And then, or some company that that's not vested can sue, and then it gets held up in courts for a long, long time, and then eventually the next president comes in and it never happens. Like, I almost wish, like any president, if you really believe in something, and this is the problem, I don't know if some of these guys believe in things, they say things, so I just wish if you really believe that this is the way to go, and you're really trying to help the little guy, which it seems like this executive order is intended to do, then go and if you control Congress, get the thing pushed through.
Got another comment up there if you want to toss that up real quick. But you're right, and I feel the same way. What's up, Jeremy? Jeremy's out in Texas. Jeremy's a guy that I orange pilled in the last 6 months, and he's building up his Bitcoin stack. What's up, Jeremy? Hope everything's well out there.
Hey, they get up early, too.
Yeah.
Earlier for him.
Yeah, a little early for him. Yeah, I agree with you. The executive orders are good, like I said, but like it's got to go through Congress, and that's always difficult. So the 401k stuff, even the 401k stuff, I guess you're right. That could be challenged. Like if they could start doing that, and then I guess if somebody wanted to in the next administration, they could take that to court and try to challenge
And what
it.
happens if like it was done, and then the court undoes it, like I'm confused. Like, as obviously they can't take away the money you earned, but they could like rip it out. Like, policy. Like, if I buy a policy from a company, right?
Your grandfathered
I'm
in.
grandfathered in under
Yeah.
that policy, which is great, and that's why I know that those policies change. So, like, when investment companies come up with these policies, they have to be approved, right,
Yeah.
by Congress, or do they get approved by like, what I mean? That, I guess the point is I'm trying to
They
think of like how it
change
breaks down to the regular
in
guy.
in traditional finance, policies, procedures, and laws change often, and it could be an industry thing, it could be a state thing, or it could be a federal thing.
But then at some point, the government steps in and says you can't do that.
Yeah.
And so you can't
Yeah.
offer that policy anymore.
Yeah.
So they almost do something
In finance, a lot of times it goes to court.
like
They'll take somebody to
the
court,
companies will
antitrust.
try
Yeah.
something,
Yeah.
they think it's a good thing, and then at some point along the way it gets legislated, and they're like, you can't do that anymore, whether it's the state level, the federal level, or some department.
Unfortunately, the government doesn't usually step in until something goes wrong.
Okay.
Like if you look at FTX, like look at what happened last cycle with FTX, Celsius, Voyager, Three Arrows Capital, like all those companies that blew up, like nobody really cared and was doing anything in regards to like crypto safety until that event occurred. And then all of a sudden everybody got excited and wanted to do all these things and be like heroes and craft all these bills and all this bullshit. So like, yeah, usually something has to happen for them to react and do anything. So, going back a little bit to the Ethereum thing, Ethereum has been pumping the last couple of days. Nothing's changed with Ethereum, to be completely clear. Like, let's just get that out of the way. Like, Ethereum is still run by a foundation. Ethereum is still proof of stake. Ethereum is still centralized. None of those things have changed. It's still what it was. Bitcoin is still far superior to Ethereum. Full stop. Okay. However, what has kind of changed is now you have some companies turning into not just Bitcoin treasury companies, but Ethereum treasury companies. And for Ethereum, you have a guy like Tom Lee, who has been pro crypto, pro Bitcoin for a very long time. He's dove in, all in, on creating an Ethereum treasury company. And he's trying to do with his company what Michael Saylor did with Bitcoin and strategy. Tom Lee, I watched it, and I'm not going to play that one today, but I did watch a video where he was being interviewed, and that's another thing. Tom Lee has been on like a press tour promoting his Ethereum treasury strategy, kind of like Saylor did way back with Bitcoin, and he's been on every channel and everything talking about it, which has coincided with the price going up, and I think that's got people excited, and that's been a big reason why Ethereum has moved. But he wants to own 5% of the Ethereum supply, and he's talking big numbers about how Ethereum can hit 20,000, 100,000, all these weird high numbers, kind of like, Saylor was doing way back, but talking about it with ETH. So that's kind of had Ethereum moving, kind of coinciding with Tom Lee being a huge Ethereum bull now. Michael Saylor, the OG in treasury company strategy, was interviewed. And I have a clip here that I want to play that's about 2 minutes long where he's talking about his strategy with strategy. And then they ask him a little about the ETH stuff, and he kind of answers that a little bit towards the end. So we'll play that, and then we'll talk about it.
Of course, MicroStrategy, strategy as it's now known, really started this crypto treasury company trend that we're seeing now. I know that you broadly are supportive of seeing competitors come out and also raise their own crypto treasuries. But how do you feel about the trend that now it's moving more into altcoins? It's moving away from Bitcoin. Do you think that that's a sustainable setup?
I still think the vast majority of the capital flowing into the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet.
So it sounds like you're not concerned that perhaps the fact that we're seeing these other digital asset treasury companies come to the fore here, expand into altcoins, you're not concerned that that's going to detract attention away from what Strategy is doing?
I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets. And what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments all around. And capital is going to flow into the digital economy due to that.
Of course.
I thought that was a very professional answer. I think he handled that very well. I want to look really quick right at the end there. Look at those numbers. That's Strategy's Bitcoin held value is 72.2 billion. Diluted EV 120.7 billion. And this is held filings as of August 3rd. It's amazing how much he continues to buy or MicroStrategy continues to buy. And he kind of brushed off the Ethereum treasury stuff, which is kind of that's the bigger conversation here is that, Ethereum's moving. It's been moving. 4,100 was an important price that it passed today, because that's been the local high since the last cycle. Like it didn't get past 4,100. I think it was December when we had a pump when Bitcoin first was going over 100,000 and Ethereum hit like $4,050 or something, and it couldn't break past 4,100, and now it has, and it's going towards 42, and it's kind of coinciding, which has got people excited with where we typically would be in the 4-year cycle. However, this is where I fall still with that theory, is that this cycle has been predominantly dominated by institutional investment, starting with BlackRock, Fidelity, and the ETFs, and then continuing with, the Trump administration allowing other companies to come in and follow the MicroStrategy model. And you have, 100 companies that are putting Bitcoin on their balance sheet. You don't have retail, like regular guys like me and Rich and others and just normal regular people aping in and buying a lot of Bitcoin and or crypto right now. Most of this market, an overwhelming percentage of this market, is still made up of people that have been here prior cycles or never left, outside of the institutional people. In order to get those parabolic run-ups, you need dumb money, which is retail investors, to be aping in and buying things, which is why you don't see traditional markets typically have crypto-like returns and volatility, because in crypto, it's overwhelmingly run with dumb money, typically. But that's changing. Now we have what's called the smart money here, which is the institutions. When the smart money comes, that's when the stability starts to come, because the smart money holds for longer term. They don't have short-term moron bias where they just want to buy something and make money real quick and get rich quick, which has been predominantly what this market has been for retail investors the last 4 cycles. So unless which I'm not, that's why I'm still 25%, unless in the next couple of weeks we get a mass influx of the dumb money, retail investors aping into this market, just throwing money around and then selling when they hit some top number, or the institutions see all the dumb money come in and they're the ones that sell the top, in which usually is what happens. And then we see, the huge run up and then, the bleed down. I don't think we're getting that parabolic run up that we've had prior. The people that are continuing to hold those shit coins that they've held for 4 years or more, thinking that, I'm just going to hold until the next, cycle top, and I'll sell at the top of the next cycle. You may never, I don't think you're going to get it. I don't think your AI play coins, I don't think your gaming tokens, I don't think your Doge coins, I don't think these tokens are going to have, and I could be wrong, and I may be wrong. I may be underestimating dumb money. They may really come back in, and maybe the smart money is going to create that marketing campaign to get them to come back, because that's what's going to be needed. You're going to need to see this stuff like on CNBC and Fox News or CNN, like normal regular channels, like all the time, where people are motivated to come in and do this. But I just don't think that's going to happen. So if that's the case, then you're going to see a break of the 4-year cycle, and Bitcoin, stair-stepping its way up, having, everything always has bear markets. There's never just only bull markets. So you'll see choppiness, you'll see bearishness, but there's going to be a lot of tokens, like I said, a year ago, 2 years ago, that will die. 99% of this market will die. It will. 99% of crypto will die because it's garbage. It's absolute trash. It's a tokenized version of the traditional system that Bitcoin was created to opt out against. Cash is trash. Why do I want to own a mimic of cash with some shit token that can't even hold its value? There's no reason for it. So that's where I think that we're heading. I got something on the screen now here. Grok, which is the AI model for X, somebody Grok said Bitcoin is going to 175,000 after Trump's executive order, based on, and this is Grok, the AI model of X, based on Trump's executive order opening 12 trillion 401k market to crypto. Conservative 1% to 2% Bitcoin allocation implies 80 to 160 billion inflows by Q4 end, with 2.5 million Bitcoin on exchanges at 116K. Expect supply squeeze and sentiment boost. My forecast, 175,000 by December 31st, 2005. Now, that's an AI model. That's not a human. That's not some fund manager. That's not somebody that has any sort of human emotion or bias. This is an AI model that's making that prediction based on the numbers. Now, does that mean it's going to hit 175 in December? Of course not. But it's a lot more reliable, I would say, to go on than some human being that's got a bias, even myself included. Like, I'm a Bitcoin maxi, so I have a bias because I'm human. This is the AI model crunching all the numbers, saying that that's what the potential could be by Q4. Next article here. I thought this was really important. This is another piece of information another piece of news that came out this week that I think is pretty important. Let's go to the Trump tweet first before we read Simon Dixon's reaction. It is my great honor to announce that I have chosen Dr. Stephen Moran, current chairman of the Council of Economic Advisors, to serve in the just vacated seat on the Federal Reserve Board until January 31st, 2026. In the meantime, we will continue to search for a permanent replacement. Stevens has a PhD in economics from Harvard University and served with distinction in my first administration. He has been with me from the beginning of my second term, and his expertise in the world of economics is unparalleled. He will do an outstanding job. Congratulations, Stephen. So Trump has implemented one of his guys into the Federal Reserve Board of Directors. Simon Dixon, who's a very good follow if you're not following him on X, breaking. Trump nominates Dr. Stephen Moran to replace the recently vacated Fed board member. Moran's aggressive stance on rates and trade means Powell could soon face his own shadow Fed chair from inside the building. 300 basis point rate cut pressure just got real, ? So here's Trump infiltrating the Fed, putting one of his own guys in there to kind of, he's been going back and forth with Jerome Powell. And here's, a chess move by Trump, putting his guy in there. Powell's term ends in a year. So Trump's going to nominate a new guy, and maybe this is it. Maybe this is the guy. Who knows? But it's kind of big news that Trump's got one of his own guys now in there in the Fed, getting ready to maneuver and choose a new person to eventually take over that Fed chair. This was very interesting, I thought. Harvard University, where more financial professionals, advisors, engineers, all these smart people come from, right? Especially traditional finance people. Harvard's $50 billion plus endowment just disclosed that they hold 117 million of Bitcoin through IBIT BlackRock shares. So you can kind of see here, I'll try to click on this to make it a little bit bigger. You can see the iShares Bitcoin ETF Trust makes up $117 million of their portfolio, which is 6th biggest holding in Harvard's endowment fund now. So Harvard's endowment fund, where they teach traditional finance bullshit, owns Bitcoin. Found that very, very interesting and amusing, to say the least. This is extremely interesting and equally amusing. Just in, 13 of the top 25 United States banks are building Bitcoin products. So here you go. JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley, U.S. Bank, PNC Bank, Truist Financial, TD Bank, Capital One, Charles Schwab, BNY Mellon, State Street, BMO Financial, American Express, HSBC, First Citizens, USAA, Citizens Financial, Fifth Third, UBS, M&T, Huntington, and Barclays. 25 biggest banks that make up our too big to fail banking system. There they are right in front of you. 13 of those 25 banks, of the biggest banks in the U.S., have some sort of Bitcoin product either already going or in the works. So JP Morgan announced for trading, Citigroup exploring, and high net worth clients only for trading. Wells Fargo, high net worth only clients for trading. Goldman Sachs, high net worth clients only for trading. Morgan Stanley, high net worth only clients for trade, which should piss you off. That's the accredited investor bullshit. U.S. Bank, custody, high net worth clients only. PNC Bank announced. Charles Schwab, trading announced. BNY Mellon, high net worth clients only. State Street announced for custody. American Express, and that's the thing. The custody part is all this is all high net worth nonsense. State Street announced. American Express has a BTC rewards card, which is pretty cool. USAA exchange integration, and Fifth Third exploring custody and exploring trading. So half of the 25 biggest banks in the United States are offering or will be offering Bitcoin products. However, it looks like a majority of that is going to be to people that are not like me and you. It's going to be all the high net worth people that they're going to start doing that with, which, again, should piss you off, which is why Bitcoin was created, to put up a middle finger to the traditional banking system that does fugazi shit like that.
Got a comment.
Was reading an article that said it could take years before crypto is incorporated into 401ks. Yeah, it's going to be a process. That's not going to happen overnight. I agree with Jeremy. That's and again, that's why an executive order is not as lucrative, important, or monumental as Congress voting on it, which I don't think even still will be something that they'll be able to vote on and pass. Next article. Less than 1 million people, and we've talked about this before, own one full Bitcoin. That's just 0.01% of the global population. If you hold one BTC, you're early. So I saw Gary Cardone. He tweeted something out where it's like, and this might be it here. Is this what he tweeted? Let me look at this chart a little bit bigger. So negative total supply 21 million, global population 8 billion, only 0.01% of the global population. The math is kind of wild. There's 60 to 70 million millionaires in the world. So that's 60 to 70 million millionaires in the world. And there's only 21 million Bitcoin. So the day, and the millionaire number will go up, like, because we'll keep printing money. So $1 million will be less and less. So there'll be more millionaires. So eventually we'll get to 100 million millionaires in the world. And only 21 million Bitcoin will ever exist. So it is mathematically impossible for every millionaire in the world to own one Bitcoin. And as we march towards Bitcoin being what we all as Bitcoiners and Bitcoin maxis and people that, watch podcasts like this believe, that Bitcoin is the most pristine collateral to ever exist, the scarcest, the hardest money, representing everything we've always wanted it to be. And as the world slowly starts to recognize that, and people start to move their ideology towards, I need to own some Bitcoin, and the marker benchmark of one Bitcoin continuing to go up and up the scale of assets that you want, or if you become a rich asshole, need to own. When it becomes more important to own one Bitcoin than to upgrade your yacht, because the one Bitcoin will represent something much bigger to your rich asshole friends than upgrading your yacht, then it's going to be a fight to try to get to that one Bitcoin, which means that the supply squeeze, the price goes up. It has to go up because not everybody can own it. It'll be so desired that the price has to go up to entice anybody to ever even think about selling it. It's a huge number to grasp. And I don't think enough people really are thinking of that when they're making their decision of where should they allocate their assets. Should I buy another Apple stock, or should I buy another NVIDIA stock, or add to my 401k? Like, all these things that are infinite, like, they can print more shares. They can dilute your shares, the shares that you own. They've done it with Apple. They've done it many times. Like, they've had splits. I think Apple split like 7-1, like, done all this dumb, weird shit with these stocks that they can do at any time. They can dilute your shares. They can add more shares. They can do all these weird things. The CEO could be a pedophile and drop your stock. All these things that are out of your control that can affect the ownership of those types of things. Then you have Bitcoin. There's no CEO. There's no central body that owns it. It's just every 10 minutes, another block is created, another reward is given, and it's tick-tock, next block, every 10 minutes of every single day. And in the next 115 years, the last 1 million of Bitcoin, the last 1 million coins will be released into the ecosystem, and then another coin will never be created after the year 2140. And as of right now, there's something like 2 million-ish on exchanges of the 19 million. So 17 million already are in some sort of custodial feature. So even though there's 21 million, technically there's only 10% of those that are actually out there for people to try to go and get and buy, which is just an amazing thought experiment. And it's crazy. And Rich, I'm talking to you, but I'm also talking to the viewers. When people really get it, when the light bulb goes off for the general population, because it hasn't yet, it's going to be amazing to watch. When people get it, when the people that really, really matter are telling you, and then everybody's like, oh yeah, that makes a lot of sense, and I should do that, because that's usually how things go. Somebody really important or important people have to be like, this is the standard, and then everybody recognizes it as a standard. When that happens, and there's a huge fight for Bitcoin, there's only one way that the price can go.
Right. Yeah, I mean, and I think the problem is there'll be a lot of people that will have had opportunities and they didn't. You know, they saw it, they talked to people, they watched a podcast or whatever it means, and they didn't do anything. And, you know, hopefully they did other things to protect, you know, to take care of themselves, but they could have done better with this. And, yeah, you know, and it's funny, like, it's unlike, you know, like, everybody's got that story. They got an uncle that, you know, like, my buddy told me we should, you know, I could help buy, you know, I could have bought into Tesla or whatever it was. Like, some,
Yep.
you know, like, you know, my buddy invented, you know, the zipper or whatever. People always have, everybody's got an uncle or a cousin or somebody's got that story. Like, I could have been a millionaire and you didn't. And it's like, you know, when we talk about it with investments, it's like opportunities may come your way, and then sometimes you have to decide if it's worth taking a chance. And I feel like when it comes to finances, people are less willing to take chances. They'll take chances with other things, with products that they put in their body. They'll take chances with other things. But when it comes to their finances, people are so nervous because money is so tight nowadays. And it's like, again, you give it do something. You have to invest in something. And you gotta, unfortunately, you gotta kind of do your research and make sure that what it makes sense. And I just feel like some people don't. Their research is they ask their dad, they ask, you know, their buddies. They don't necessarily ask the people that maybe know what they're talking about. They're not paying attention to some of the options. I've learned a lot, I'll tell you that.
All right, I'm gonna end this podcast where it all started, not for the podcast, but where the Bitcoin ideology all started. Lawrence Lepard tweeted this out, and Opportunity Cost was the one that originally tweeted this out. But I saw this last night and I retweeted it because I think this video is absolutely perfect. It encompasses exactly why what I just spent 5 minutes talking about is the most important thing to ever be created in the traditional in the finance world, period. It's probably the most important technology that it's ever been created. And it'll take maybe a generation or two for us to realize that as a species. Saying that now may be like hyperbole, but I truly believe that Bitcoin will change the way, once it's adopted the way that it will be adopted. It's going to change so many things and so many ways we view the world and things that we do, and stop things that were happening before that will no longer be able to happen in a world where money can't be created out of thin air. But this is a clip, the greatest scam in history, the creation of the Federal Reserve. And we're going to play this video. Before I do, I want to tell you, like we always do, because this is going to take us out of the podcast. When this is over, Rich, we can just end the podcast. So 2 things. Like, subscribe, share. And the second thing, as always, don't trust, verify. Enjoy these last 2 minutes of our podcast today.
Jekyll Island, November 1910. 7 bankers meeting in secret to create America's central bank. We just can't call it that. The 1907 panic nearly destroyed us. Banks failed, fortunes vanished. We want to control America's money supply, create booms, trigger busts, and profit from both. And how will we do that? We'll create money from nothing, loan it to the government, and charge interest. Legal counterfeiting, my friends. But there's a cost. Every dollar we print steals value from existing dollars. It's a hidden tax that flows directly to us. And it gets worse. If we ever get off the gold standard, governments can print money for wars. Endless wars become possible and profitable. Since Americans hate central banks, we'll call it the Federal Reserve. Sounds governmental, doesn't it? It's not. The president will appoint board members, but we'll pick who he appoints. We'll have 12 regional banks. Looks decentralized, democratic even, but New York banks control them all. That's us. You're probably wondering how we're going to get this through Congress. December 23rd, 1913. Most of Congress home for Christmas. Perfect timing for passing unpopular legislation. I'll publicly oppose our own bill in Congress. They'll pass it thinking they beat Wall Street. We'll fund university chairs, write the textbooks. They'll teach our system as economic science. Beautiful. Every American born after this will inherit debt on money we created from nothing. Generational servitude. The Federal Reserve. Not federal, no reserves. But everyone will think it's their government protecting them.
Good afternoon.